no matter how beautiful the setup you're looking at on your charts can be, it can fail. Yes, it can fail. No setup is too beautiful to fail. What's up, good people? You're welcome back to a new video on this channel. So if you're new to the channel, kindly consider smashing the subscribe button and also turning on bell notifications so as to get notified whenever I post another educative video on this channel. So basically, I've been posting videos about my strategy. So I've posted about 2 episodes, and today I'm so glad to share with you guys a new video. Why? Because we are entering into the main business gradually. Yeah. So today, guys, I'll be sharing with you the reason why head and shoulder patterns fail in forex trading. You understand? So traders might be wondering that, okay, I'm seeing a reversal pattern which is head and shoulder. Some people call it Quasimodo, some people call it head and shoulder, and it will be too beautiful. You'll be like, wow, this is an A+ setup. Let me take my trade and expect massive profits. But unfortunately, markets will do the other way around. You understand? So it is actually totally normal. But I assure you, after watching this video, you will improve the knowledge of your head and shoulder pattern which you've known earlier. Now, to just make it brief and explanatory, for those of us that have been following the video I've been posting for a while now, you already understand this. But for those that are just joining me, when I say head and shoulder, I mean Quasimodo. There are different head and shoulder pattern for different traders. But for me, as you can see on my chart right now, if I am taking a setup which is head and shoulder, it has to be Quasimodo, which is breaking the low. Like, there must be a break of structure. Basically, that is my own form of head and shoulder, not the regular head and shoulder which will be of equal parts. If it is of equal lows or equal highs, then it is not my setup. I'm not taking it. Understand? I just want to make that clarification. Understand? Now, I will dive straight into the chart right now and show you guys some example. And of course, today I will be explaining about take profit, stop loss, how to set it, and what to look out and the like. So without further ado, let's jump straight into it. So this is gold trade. Of course, this is your high, this is your low, and this is your higher high, and this is your lower low. So I'm labeling this for the sake of those that are just joining this video for the first time. So I won't be labeling it again in the next, or let me say from now, because I'll just be putting this rectangular line there just to notify your entry point. So if we take a look at this chart, this setup very well, it is a beautiful setup. Yeah. And this is good on this is October last year, 2023, on the 25th. Now, as I said earlier, I'll be explaining why setup fail. If I see some example, I will explain, and if not, I'll just be explaining how to set your take profits, your stop loss, and if there's any QM setup that fails, I will always show you. You understand? If I see, and if not, in the next video, definitely I will give you more example on that as promised. You understand? And now let's jump into the first reason why QM, or let me say head and shoulder pattern, do fail. The first reason is late retests. Yes. Now this is high low, higher high, lower low, and price reversed into this point and entered, and of course price dropped about over 200 pips, almost 230 pips. Yes, I will explain what I mean by late retest. Now this is the gold charts. I will always say this virtually in all my videos. Whenever I give you something here, please do all to backtest it. Backtest and see how it works. You might not be trading gold, you might be trading GBP pair, you might be trading euro pair, or whatsoever. So look at how it relates with yours. I'm trading based on gold, so I only trade gold personally, and I already know how it works. That is why I'm using gold to explain. So just do the work and see how it works on your chart. You understand? Now let's continue. This is high low, high low, low. Now, one more thing before you see, whenever you see a QM setup, or let me say an head and shoulder pattern, look for the time frame that makes it obvious the most. Now, this is the 1 hour time frame. You can see it is very obvious. If you change it to the line chart, we have the high, lower, low, and your entry right there. If you change it to the 30 minutes, it is still obvious. If you change it to the 15 minutes, let me move it all the way right here. It is still obvious, but I will prefer the 1 hour time frame. Why? Because it is the highest time frame we can see. If you change it to H4 time frame, we won't be seeing anything like that again. You understand? And that does not mean it is not valid. As you can see, we've labeled it, but we are not seeing anything. But once we change it to the 1 hour time frame, we can see our QM setup already. So QM setup is also known as head and shoulder pattern, for those that might want to ask. Okay, let's continue. Now, what do I mean by late retest? As you can see, this setup formed when is our lower low? When did our lower low form? This is 23rd of October. Our lower low formed around 23rd of October. And as you can see, price reversed to this point, but didn't enter our entry point. Now, for me as a gold trader, even if price reverses into my entry point, let's say the next day, after going up and down, as you can see, these are just like, let's say, like consolidation or whatsoever, you understand? If price reverses into my entry point the next day or 2 days after, to me, the trade is still valid, except I see something else on the lower time frame. Understand? Of course, I can't share all of it right here because my mentees will come for me. You understand? So I will only try to share very good, valuable things, and of course keep some other things for my mentees. Understand? So let's just continue. If I see something else on the lower time frame telling me that okay, this setup has been invalidated. So you have to know whenever a setup has been invalidated, probably from your lower time frame or from your higher time frame, the sign the markets give you that okay, this setup is no longer valid, we are still going bullish or we are still going bearish. You understand? So if this is a late retest, as you can see, price still came all the way down. This is news event, and price still hits the TP, which is the lower low. Of course, this is your lower low right here, and price still came all the way down to this point and hit your TP. You understand? So if you are not giving a sign that the setup has been invalidated on gold, do you understand? On gold, then you can still always enter the trade, probably let's say 2 days after or 3 days after, making sure that the setup you are seeing is on H1 time frame or higher time frame, or let's say 30 minutes time frame. You understand? But if it is on all these 15 minutes, 5 minutes, and it is not obvious on H1 30 minutes, please, it is not always advisable. Now, that is the first reason why head and shoulder patterns do fail. You understand? Whenever the entry point is tested late, then it is not always advisable. Even as a new trader, if you are going to take this kind of trade, you take lower risk on this. Unlike it, if it had actually entered there, then you can go on full margin beast mode, all this kind of stuff. But like this, it is not always still advisable to go full margin. Why? Because it can easily fail. Then the second reason is when price tests your entry point the second time. Yes, I will explain this. Okay, very good. I'll use this setup to explain what I'm saying. But first of all, let me quickly explain. If you are going to enter a trade like this, where to set your stop loss. Of course, I've explained QML. If you can see right here, there's a supply zone right here. And if you are going to enter, let's say you enter here, let's say 30 pips away from the supply zone, then let's say we are putting our stop loss right above the supply zone, 30 pips above the supply zone. That is what I do advise, understand, generally. Although there are things you are still going to have to check for on your lower time frame. Don't worry, we are still getting into it. But for now, let me put it in a literal way. So let's say you are putting your stop loss around 1988. Let me put the red sign there. Okay, 1988. Let's see if price actually hit our stop loss before selling. As you can see, price didn't hit your stop loss even after going above the demand zone with about 6 pips. Understand? Price above the supply zone rather. Then price dropped about 216 pips before started going bullish. So let's say 30 pips stop loss to 200 pips. So that's a very, very good RR. It should be around 7 RR or so, I don't know. So now that is it. And of course, for your TP, your first TP, if you are trying to play safe, should be your first low right here. So basically, what I'm saying is this should be your TP1. If you are taking your profits, you should be taking your first profit around here, which is the first low. Your second profit should be taken here, which is your lower low. So now let's say you're taking your profit, your first TP here. That's about over 100 pips. It's not so bad. Then you probably break even if you like, and you take your second TP, the second low, which is the lower low, which is about 200 pips. Then it is a beautiful trade, you understand? And of course, your third TP, you can now break even and see if there is a swing low, let's say to this point. Of course, price did not reach there. So it's always advisable to take your profit first low or the lower low, you understand? So that's for your TP and your stop loss. Now let's go to the next reason why I said head and shoulder pattern do fail. Now, okay, let me move this to our second setup, which I've labeled right. Sorry. Okay, good. Yeah. So this is another setup. This is your high, low, higher high, lower low, and of course your entry. Now, I said whenever price tests a what is it called? Your entry point the second time. Now, there are exceptions to it. If you look at this trade very well, this is your entry point right here. Price entered your entry point, just tapped into it by a few pips, less than 3 pips, and dropped about 62 pips. Now, price reversed into your entry point and kept dropping. So it dropped about how many pips before reversing finally? It dropped about 116 pips before finally reversing upwards. Now, when I mean there are exceptions, whenever you enter a trade like this, let's say you've entered at the first leg right here, which is your initial entry point, and price drops, and it is yet to drop to your TP, your like the second leg, which is your lower low right here, this lower low. If price reverses from this point all the way up, or from this point which is reversed actually all the way up, you can still always either hold your trade or enter again. Although there are some cases whereby trade will just keep going bullish and it will not even reach your TP at all, you understand? And if you hit your stop loss, that is when probably there is a demand zone in the let's say price entered into a demand zone and started going bullish, or the trend is bullish, you understand? If the trend is bullish, obviously from the H1, then price can actually keep going bullish after entering into the demand zone, understand? But if you see that price is probably consolidating in H1 and price just tapped into your entry point after seeing a very nice head and shoulder pattern, which is also QM pattern, and price dropped about, let's say, 50 pips or 49 pips. I'm talking based on what I'm seeing on gold. Please, I've said it earlier, do well to backtest and see how it works on the charts you trade, understand? Now price drops about 40 pips and reverses into your entry points. As long as you've not seen confirmation for an invalidated setup on your lower time frame or whatever time frame you use to confirm your setup still valid or not, as long as price has not given you that sign, then you can still hold your trade, except price tapped into a demand zone, a good demand zone, and started going bullish, then you can probably break even, because there are sometimes price will not even enter your entry points, just go up a bit and then continue to go down to hit your TP. You understand? So basically, I've explained two things. The first thing is late retest. Whenever price tests entry points late, it is not always advisable to enter the trade, or if you're going to enter with low risk. And secondly, if price tests your entry points 2 times, then you shouldn't. Now, how will I now know if the setup is invalid for the second entry? Let's say, for instance, price has actually entered the entry point and price has already dropped to around this point, almost close to your TP. Let's say 10 pips or 15 pips sometimes, depending on the kind of setup. And price now reverses into your entry point. You are not to enter again. Price has dropped already. You understand? Price has given out what it wants to give out. It is not always advisable to enter that kind of setup. Else, you just see that you are taking off from the market. You understand? Eating your stop loss or blowing the account if you do not use stop loss. You understand? So, but as long as price has not entered into probably a demand zone or your TP area, not your TP line, not your take profit, your TP area, your zone for TP, as long as price has not entered into that zone and reverses into your entry point and still giving you a sign that it is still a valid setup, then you can always enter again. You understand? It is just, sometimes it is always a miss for re-entry for probably traders that are yet to enter at first. Price does it sometimes, and this is a good example. Stand price dropped about 60 pips or 62 pips, reverses into the entry point and dropped totally around 110 pips or so before going bullish. You understand? So those are the kind of example I will give in this video. You understand? So I talked majorly on two things: late retest and second retest. You understand? So take note of it, backtest on those two things, and I've explained your taking profits for setups that have QM level. You understand? Sorry, for stop loss for setup that have QM level, and also I explained taking profits, your TP1, your TP2. In the next video, I will start from QMC continuation and I'll tell you about setup that fail. So I'll be giving you more example of setup that fail. You understand? Of course, here I only explain the setup that are okay. You understand? So setup that actually hits TP, but there are some setup that do fail. And as you can see, I already said it in the previous video that no setup or no strategies and only grew. There are setup that fail. You understand? In fact, you can even be losing back to back on a strategy. You understand? But so far you are constant with it, you know what's wrong, and continuous backtesting, you know what's happening. You understand? So that's pretty much it. If you find this video helpful, do also like the video, subscribe to the channel, and also turn on bell notification. In the next video, I will explain about QMC, and I'll give more example of failed setup and the reason why they failed. I'll be showing you. I would have notes the setups, and I'll be showing you the example and the reason why they failed. So do want to subscribe, and if you have any question at all, drop it in the comment section. I'll see you in the next one. Peace.